Right, guys, so we've just done an hour-long interview with Raja, WicksDontLie on tradingup.com podcast. Go and check it out. Full of great advice, information for any trader out there. Now we're going to walk through something you discussed on the show, actually, Raja. So over to you. This is a little strategy dropped in the show. So, guys, let's hear this.
Okay, so basically this morning what happened was when you see this big candle was from the interest rates this morning. So when price is moving bullish, you're looking to see that, okay, if it's moving bullish, there has to be a level where price might, decide to reject from. So what you have to do is you have to go to the higher time frame. So let's say we go to the higher time frame on the 4 hour. Now, when we look left, this is the point where this is the weekly open, and this was last Friday's close. So when you see here on the 27th of January, before London Open, price rejected this area, which is 142,650, I'd say. So this is an important zone where price might reject on the 4 hour as it's coming up. But as this 4 hour is forming, we're not really sure if it's going to come down or not, right? So we need to look for some confirmations. So what we're going to do is we're going to go to the small time frames to see if we have any confirmation. So we go to the 30-minute. Now, when we reach the 30-minute, what we see is that we have a bullish candle at this main strong resistance, and then we have a bearish candle forming right over here. Yep. So when this bearish candle is forming on a 30-minute time frame on a very, very strong resistance, there's a very high chance that the next candle is going to go bearish as well. But you have to place a condition. And the condition is going to be that as long as the next candle stays below the high of the previous candle, which is going to be this one, and it's also going to be your stop loss, it should continue down to the next support area, which is going to be, somewhere over here, looking at this past information. So if you start to calculate this distance, let's say we had the open right over here around 142,567. This is a good 20 pip move. Right? So this morning I actually placed a sell order on this candle formation. My stop was above the previous candle, and I anticipated it to come down. It came down, and I closed. I let a runner run it, and that runner ran to maybe 15, 16 pips, and then I closed.
Perfect.
So the idea here is basically you're going off of the very basic idea of like, okay, if prices are going to go down, it will make lower lows, lower highs. Right? And the candles are going to do the same thing. The candles are going to go something like this as well. Like you're going to have a bearish candle, and the next candle you expect to make lower lows and lower highs as well, which happened in our example, which I highlighted right over here.
Cool. And guys, if you want to, I suppose, get a bit more detail around this, you can head over to the podcast and hear Roger explain a lot more around this. Or obviously, you can catch your live streams and see the full thing in action as he walks through it. And I saw one the other day, and they're fantastic stuff. So, look, Roger, thank you very much for coming on the show once again. Now, what's the best way for the guys to get a hold of you?
Thanks so much, Cam. The best way to get a hold of me is on Instagram. My handle is WicksDontLie. I think it's going to be in the description as well. So that's the best way to get a hold of me.
Brilliant. Well, look, thank you very much again, and fantastic stuff.